What's going on, traders? It's Lucas here from the Commitment of Traders Club. Thank you so much for joining us today. Let's learn together how to beat the banks, trade with the banks, and earn some money in the Forex market. What have I got in line for you today? I've got a fantastic setup lined up for GBP, USD. I'm currently looking at it on the daily, but let's get straight into the analysis and how to take trades using the Commitment of Traders data. So, how I like to start my analysis, I look at things on the daily, see if there's any nice setups panning out, then I get my confluences from the monthly, the weekly. So, turning to the monthly, this is where I get my direction of the trade. What can we see? Okay, so for the past couple of years we've been moving sideways. We've not had a nice trend like we have previously, but we can see that we are, since 1st of April, 1st of April 2020, we're in a nice move to the upside. We'll be looking for long trades. Remember, the trend is your friend. Never count a trend unless you want to damage your chances of taking a profitable trade. We want to be successful, and we always want to be on the right side of the market. Forex trading is all about probabilities. We want the highest probability trades in our favour. So we're looking for long trades. We can see that clearly. In terms of target area, we've got this area here of previous resistance. So we'll be looking to target this particular area as a potential area for our targets. Okay. Now, going down onto the weekly, what can we see? Any confluences this far? Absolutely. We can see that we were correct in our uptrend analysis. We've had the down here, the low, then we've made continual higher lows and high highs, pushing up to where we are now, which is at the 26th of April, that particular week. What can we see in terms of patterns? Okay, so if I take my drawing tool, we've had a nice impulse to the upside, have retraced slightly. Perhaps there's room for a further impulse, or it may come into a deeper retracement period before then continuing to the upside. This is what we're going to have a look at to make sure that we're on the right side of the market in this instance. Any patterns, any areas of interest? Absolutely. So we'll draw on here our current support zone, and we've obviously got this resistance up here of a nice strong wick rejection. We'll hopefully be looking to target here and above, as long as we get a 1-to-1 risk to reward, and we can make a break-even trade minimum of 1 to 3 risk to reward, then we're in the money, we're good to execute a trade. Going back down onto the daily, looking for patterns, looking for my Fibonacci levels. What can we see? So at the previous resistance area, support area, down here, we had a nice double bottom. We've also created a W formation, which is now pushed up. It has overextended, so we are definitely looking for that pullback before the continuation to the upside. We'll be looking to capitalize on that pullback area right about there. So what I like to do, and what I find most effective as part of my trading strategy, is to get the Fibonacci tool. Now, if you're not part of the Commitment of Traders Club, I highly recommend you head over to my website, www.commitmentofttradersclub.com. Join, become a member. You can either become a COT member or a platinum member and get access to the fantastic tools, tips. You get access to our trading plan, everything you need to become successful in the market. One of my tools is the Fibonacci trading tool, and how it works, feel free to check out the previous video. We take it from the previous impulse leg up to the current high, which is up here, and we get our nice daily levels forming. Now, what can we see? Okay, we like to see that the market will pull back to this magic number, as I call it, the 0.618 zone. What happens at this zone? The banks and institutions trade it. They like it to come back to this level before making that strong impulse to the upside. From it here, it creates huge market movements. It's just where money likes to push from, or up or down, whichever instance we're trading. So what can we see from our current technical and price action analysis? Right, the market has entered its retracement phase. It has touched the 0.5 area. Now that's not a Fibonacci number, but it is a key area of interest. Now part of my plan is I like to take trades that hit the 0.618% zone. So we are hoping that this slight push to the upside will continue its retracement down and form a deeper retracement before then pushing up to the top. Now the question is, and the secret in this instance is, how do we know when the retracement is going to end? And why is it retracing in the first place? Both of those answers are due to financial institutions. They are the ones who make money move. They are the ones who have access to the most amount of funds and push the price up or down, and us as retail traders like to obviously profit from their big moves. Now they can't move money as quickly as we can. We can enter into an instant execution. They need to build their positions up, which is why I look at the monthly. They trade the monthly, the price is moving up, the trend is to the upside, they'll be trying to move their money to the upside equally. So to find out and get a confidence that we are correct in our analysis that the market will retrace deeper, we head over to the Commitment of Traders Club and we go on the COT reports, the Commitment of Traders reports. And what that will tell us is the amount of positions opened long or short for each particular currency pair by the institutional banks and traders. They have a duty to report it. Now we're trading GBP USD, so what we'll do, we'll head over to the GBP report. It's all set out nicely here for you. It's updated every week on a Friday, which is when they're published. And we are trading currently, we're obviously back testing it. Back testing is important in any trading plan to make sure that your plan is functioning well. So we've had from the 20th of April to the 26th of April. So we head over to our plan. So from the 20th of April to the 27th of April. 20th of April, we see that the amount of positions changed long and short was open fairly equally. So 8,200 long positions were open GBP USD and 8,600 were open in the short positions GBP USD. So it balanced itself out. What can that tell us? So we had this huge push to the upside, and the opening of short positions here is very simply banks and institutions taking profits. They open short positions, they've sold, they've entered into sell positions, they've taken their profits. Now they've also opened an equal amount of long positions. Now what does that tell us? That tells us that they're not ready for this trend to die down yet. They're still continuing that bullish trend to the upside, and they're still moving money into buy positions. So we are correct in our analysis that the market is pushing to the upside, but we want to know how far this pullback is going to come. The next week analysis, the 27th of the 4th, and on the website you can zoom in for clarity if you need be. 27th, we can see that the positions long and short changed dramatically. So the net positions were plus 25,000 to the long side. They therefore increased the next week plus 29,218 net positions in favour of a long bias. They closed out 1,136 long positions and also closed loads of short positions, 5,000 to be exact. Now what does that tell us? By them closing their long positions and also closing their short positions, that would have made the price fall back down, which is where we are now. So we do anticipate this retracement to continue. On the contrary, if they were to open multiple long positions and close out multiple short positions in this instance, then we would see the market push to the upside and the retracement would have ended. But the fact that they're still closing long positions but also closing short positions, this tells us that they are no longer looking to sell, or I should say not for much longer looking to sell, and they are starting to open up their buy orders. So over to our chart, let's see how the market plays out. Massive impulse to the downside, almost touching our 0.618 area. I'm not going to be nitpicky, we can even move that up slightly. I would say that we had a nice clean touch on our magic number. Now what does that mean? Boom, that's an entry reason for me. I head down onto the 4 hour. This is where I monitor my trades, also take the entry reasons. We like to now see that the market is changing from the bearish momentum, or from the retracement, into the bullish continuation momentum. How can we tell that? It's one of the questions that I always ask or try to find the answers to from other traders out there. And my findings are candlestick formations and patterns are key in deciding when the market has finished the retracement. Wick rejections, price bouncing off a particular level is also a key signal that the movement and the momentum is about to change. So what we see here is huge wick rejection there, and a huge wick rejection down here. My mouse is doing crazy things, apologies for that. Let's get rid of this. As I was saying, huge wick rejections in this area, reacting to the magic number. Price is failing to break below it, which is another confluence that is about to take that push to the upside and continue. So this is all good for my reasons. Again, head over to our website, become a member, and find out exactly what my entry reasons are, and get access to my trading plan. It will help you in the long run, help you develop your own, and help you back test it. So what do? Depending on where I am in the day, I'll either have a instant execution order or I have a pending order. And if I have a pending order, it will be just above the level, but also you can see prices at the moment higher than where I've put the pending order, so hopefully it comes back and taps us in. Now what we want is always a 1 to 3 risk to reward. So we head over to the daily. It allows us to aim our targets clearer, and we will be looking to first capitalize on this huge move up to the top with a 1 to 3 risk to reward, which we actually have at this stage. Stop loss, very important. Never have it too tight. You'll just get stopped out by market manipulations before the market pushes in your favor. Let's enter this trade and see how the market pans out. Let's go. Tapped us in there. Again, with the spread, that would have definitely tapped us in. We're in the market. It's all good. We've accepted our loss here. Looking at a nice 3.01 risk to reward. It's our requirements for a good trade. We'll head over to the daily as we're swing traders. Anticipate the market to take some time to hit that move. And we'll just get rid of our fib levels for clarity. And let's see how the market pans out. There we have it, an absolutely fantastic result. 1 to 3 risk to reward. It smashed through our targets. If we were monitoring the trade carefully and we saw that the momentum was continuing on the 4-hour chart, which it clearly did. It did have a huge wick rejection in this area. We could have maybe stretched it longer, but FOMO, no fear of missing out. We took our 1 to 3, we accepted our reward, we accepted our risk, and nevertheless that is a huge smashing profit. 1 to 3 risk to reward for 200 pips over a few days. Now, reviewing this trade, how do we know what's happening? What is the secret to taking good trades like this? Secret, rule number 1, patience. Trades, they come, they go. You don't have to take every trade you see, you just have to take the ones that satisfy your conditions. Head over to the Commitment of Trading Club website. We have everything over there that you need, including, if you're a club member, our trading plan for you to download onto your computer, assist you with your own, or feel free to use ours. Just be careful to back test it, obviously. Our Fibonacci level drawn from the previous leg to the upside gave us that magic number that we were looking at for that impulse to push back up to our overall trend to the upside. And finally, the key secret that most traders aren't talking about is the commitment of traders, where the banks are moving their money. From here we can see, if we review the trade from roughly the 6th of May, if we head back over to our GBP COT data, what we want to see, 6th of May, okay, so from the 4th of May reports, so the week before they closed, some long positions, but then the following week from the 11th of May, huge long position change that trading week, 12,000 open positions. That is quite clearly reflected here in this massive push to the upside, which we anticipated. Well, traders, thank you for tuning in. I hope you learned something new today. I hope you learned that there's a massive secret to be gained from this, which is the commitment of traders. If you want access to all the cool content we have and grow your trading strategy into a retail trader to a fantastic institutional trading strategy, head over there now and see what we've got to offer. Stay safe and remember, happy trading.